ツマンおじ今日のニュースを読みます。Reuters South Korea economy unexpected contract in quarter 4, but AI boom brightened outlook. By Ji-hoon Lee and Cynthia Kim, January 22, 2026. Summary: Quarter 4 GDP minus 0.3% quarter on quarter versus plus 0.1% forecast. Contraction due to unfavorable base effects, weak investment. Economy growth seen stronger in 2026 on AI boom. Central bank signals end to easing cycle. Seoul, January 22, Reuters. South Korea's economy unexpectedly shrank in the final quarter of 2025, marking the biggest slump in 3 years on weaker investment and export. But the global AI boom is set to improve the outlook and allow the central bank to retain its steady rate stance. The contraction followed a sharp expansion in the third quarter when the new administration of President Lee Jae-myung rolled out stimulus policy to boost domestic demand. The fourth quarter contraction has not derailed overall growth, and the policy backdrop points toward the cautious central bank, said David Chia, economist at Moody's Analytics, echoing a consensus view for strong growth this year, underpinned by its roaring semiconductor sector. Gross domestic product decreased 0.3% in the October to December period from the preceding 3 months on a seasonal adjustment basis. Advanced central bank estimate showed on Thursday, compared with median 0.1% increase tipped in on Reuters polls of economists. It was the steepest economic contraction since the first quarter of 2022. But analysis said the result was largely payback from the previous quarter's growth of 1.3%, which was the fastest in almost 4 years. On the top of the unfavorable base effect, the pace of recovery in construction investment was weaker than expected, dragging down the growth rate a little more, said Lee Dong-won, Director General of the Economy Statistics Department at the Bank of Korea. Still, domestic investment is seen improving this year as more government infrastructure projects are expected, and the companies plan to expand semiconductor factories and artificial intelligence investment, Lee said. Tech demand to keep economy humming. South Korea's stock benchmark topped 5,000 points for the first time in morning trade on Thursday, powered by gains in chipmakers like Samsung Electronics and SK Hynix, a level targeted by President Lee in just over 6 months since he took office. Construction investment, down 3.9%, was the biggest drag in the last quarter, while facility investment dropped 1.8%. Private consumption rose 0.3% after expanding 1.3% in the previous quarter on a boost from the government extra budget. Export fell 2.1%, hurt by autos and machinery, despite a tariff deal with the US that was finalized in November, while import declined 1.7%, resulting in a net negative contribution of 0.2 percentage point. Asia's fourth largest economy grew 1.0% in 2025 after expanding 2.0% in 2024, marking the slowest annual growth since 2020, according to the BOK, which expected the economy to grow 1.8% in 2026. Government expected stronger growth of 2.0% this year. The Bank of Korea last week signaled an end to its current easing cycle after keeping interest rate unchanged, prioritized foreign exchange stability as it flagged upside risk to this year's economic growth. With the pressure from the weaker won in focus, rate cuts in early 2026 appear unlikely. Easing now could worsen currency depreciation, heighten financial stability risk, and revive inflation pressure, said Chia of Moody's Analytics. On a year-on-year basis, GDP expanded 1.5% in the first quarter, after rising 1.8% in the third quarter, also missing economists' expectation for median 1.9% increase. Growth held up last year on strong semiconductor exports, and it is clear that this year will be stronger than last year. But other than the semiconductor sector, there is little momentum on the domestic demand side, said Park Sang-hyun, an economist at IM Securities. 以上です。